Australia's unemployment rate has increased slightly in October, lifting to 3.7%. The Australian Bureau of Statistics said roughly 55,000 jobs were created during the month. The participation rate, which is the percentage of people either in work or actively looking for work, surged back to the record high of 67%. Part-time jobs increased by about 38,000, while full-time jobs lifted by roughly 17,000. Joining me now on set is Matt Hassan, Senior Economist at Westpac. Matt, thanks for your time. 55,000 jobs created. That seems pretty strong for October.
Yeah, we're coming off a couple of softer months. So the average, we'd like to take a 3-month average, I think, with the labour market numbers, and it's a little bit stronger than expected. So on a 3-month average basis, it's about 35,000. We were looking for something more in the sort of 25,000 range. There are some wrinkles in there, though. We know that we had the Voice referendum going on in the second week of the survey period. And that may have had a hand in it, although most of the people that get involved with conducting the referendums are already employed somewhere else, so it doesn't always show up in the labour market data. But certainly, I think that the main takeaway here is a little bit better than expected. Yeah, for the month.
And participation rate at a record high. What's that telling us about the jobs market right now?
Well, it's telling us that it's still pretty tight. It's in contrast to the US, for example, where participations remain relatively low. We're really stretched at the limit here. We've had not only low unemployment, but also participation near record highs. The proportion of the working age population that are engaged is very high. I think, though, what we're looking for here is any sort of hints of a turn in conditions. And we have had a few. So if you look at the unemployment rate, it has crept up slightly from 3.5 to 3.7. The underemployment rate also has risen from its lows. And some of the more sensitive segments to the tidal zones of the labour market, for example, have also turned. One that I'd keep an eye on is the youth unemployment rate.
Right.
It came in at 9.2 today. So at its low last year, that was around 7. So there's some sort of initial signs of a shift that's starting to show through, but the wider picture is still of a tight labour market. High participation rates, low unemployment rates, all things considered.
And the RBA, they're expecting unemployment to slowly creep up over the next couple of years, right?
That's right. As I've sort of said more recently with their most revised forecasts, they're expecting some of the softening in the labour market to show more through hours worked or average hours worked rather than headcount. So I think aside from the unemployment rate, they'll really be looking at measures like underemployment and underutilisation and some of these other proxies we get for the degree to which people are adjusting their hours worked. The hours worked number out today was still quite firm, though. It's actually coming more into line with what we've seen with employment growth over the last year, up about 3% through the year. Again, tentative signs of slowing, but not a decisive shift yet.
And the other big factor is the big strength in Australia's population and basically migrants coming to the country. So I guess that adds, you need to create a certain amount of jobs each month just to keep the unemployment rate stable, don't you?
That's right. So 3% through the year, that's now against a growth in the working age population of about 2.8. So the acceleration and migration and population growth has been heavily skewed towards the working age groups. So we've seen very strong growth in the labour supply in a working age sense. And it means that we're sort of drawn sort of in line with that population growth element. It's telling us that the supply side is starting to meet demand. And again, that's a tentative turning point for the market. But again, it's a really gradual one rather than a decisive one at this stage.
Yesterday, we got the wage growth numbers for the September quarter. I think it was expected, but it was pretty strong. Are you expecting wages to continue accelerating in this quarter we're in now?
No, we expect it to slow up in the coming quarter. It'll still likely nudge slightly higher on an annual basis. We're still cycling that big September quarter adjustment. So, but when we look at it on a 3-month basis, it's likely to be a bit softer than what we saw in the September quarter. Yeah, a funny one, because I think the 1.3% rise for the quarter was bang on expectations. But I think, again, there's some psychological elements that are coming into play, which I think will be relevant for the RBA's management of expectations. Hitting a 4 handle on your wages growth with an inflation that's still got a 5 handle at the end of this year. All of these things sort of frame expectations when you come into the next round of wage negotiations and all the next round of pricing decisions. And the difference between a 3 and a 4 or a 4 and a 5 can be material.
What's the RBA's move then?
So look, it's going to be line ball. I think they're making it quite clear that they're keying the decisions off the quarterly updates. So when we get the big quarterly CPI numbers for the December quarter, and then the refresh of the forecast that comes off the back of that. So we think it still hinges very much on what the December quarter CPI number comes in as.
Sure.
We think that'll be enough to keep them on hold, but February's certainly a live meeting at this stage.
Matt Hassan from Westpac, thanks so much for your time.
Thank you.